how to pick stocks that are good for buying and will make money for you. And I think I've touched on this before, but today we are specifically just going through how to pick the stocks and what to do, which is essentially screening and choosing the stocks. When it comes to stock screening, we use Finviz. Finviz is a platform where you can get news from stocks. You can see what is the market doing, among other things, and how the market outlook is. Like here on the screen, you can see a lot of stocks are not doing so good. Most of them are red. We want green, and like I said before, with the Russia-Ukraine stuff going on, we'll see more of the energy, defense, that stuff will start going up a little bit compared to the Corona period where we had health stocks going up. So here on Finviz, you can see there's a lot of things going on here. We have, top gainers. We have, among other things, new highs. We have new lows, losers, trend lines and all that. All this is part of the screening procedure where you get to choose which outlook you want to pursue. So I'll just go through some of these things and then we see what they mean. Now, when it comes to top gainers, is we are looking at stocks that have performed well in the period of time that is being displayed here. So some of them, as you can see, 200, 43%, 29%, 10, 13. All these percentages is what some of these have done. So as you can see in the US stock market, when the gainers gain, they gain a lot, 40, 50, 60%. There's a 60 here. And when the losers lose, they also lose a lot. So we have, 40, 40, 40, 40, 30, 20. So Finviz essentially gives you an idea of the outlook right now on the market. What is going up, what is going down, what has done what, and all that. Now, part of what TradingView Finviz shows you is the support and resistance. So if you just want stocks that have been on the support level, let me go back here and speak a little bit about the support and resistance, because that speaks a lot about what needs to be done when it comes to screening. If you go to TradingView and open up a chart, and today I had recommended Editor's Medicine. Okay, so this is Edit. As you can see, Edit has performed well so far. This is the first day of March. This is already gone. What percentage is this? Let me just check. From the day opening today, it had gone up 11%. Okay, so let's go here. Try to get this situated. Now, I don't know if everybody can see this. Can we get a confirmation if this is clear, good to go? Can you guys hear me?
Loud and clear.
Okay, is the screen showing good? Because someone was having display issues. They said it's too tiny.
Yeah, it's good.
Okay, so I was back here at Finviz, and we're discussing support and resistance. What does that mean, right? So I had to open this page where we are looking at today's recommendation, which is edit. And with edit, it's what I recommended today, but let's use that as an example of how to do support and resistance. So essentially, support is like a floor to which when the stock goes down to, it bounces back up, while resistance is like a ceiling where if it goes up, it hits that ceiling and it never goes beyond that and bounces back down. So you can see support and resistance as those two lines in which the stock keep bouncing between and stagnating around there. Now, on edit, for example, I'll just draw some lines here to show what support and resistance might look like. So around here, okay, that line and this line. These are literal lines. They're not like specific to whatever number or formula. You just look at the chart, how it's moving, and you realize at some point it starts bouncing back and forth, back and forth, back and forth. And you can see clearly between these two lines, it keeps bouncing back and forth within those two lines. So when you're looking at support is this bottom line here, where every time it comes to this line, it goes up. Every time it comes to this line, it goes up. Every time it tries to go to this line, it goes up. So that is your support. And resistance is the top line, where every time it tries to go above it, it goes down, above it, goes down, and all that. Now, if you're trading this stock, just using support and resistance, you can figure out that if it's done this up and down twice, chances are the third time it might do the same thing. So when you're screening for stocks, you can specify ones that have support and resistance like that, on which in Finviz, you can just select support and it will show you all the stocks that are at a support level. Okay. As you can see on the screen, some of the supports are diagonal going down. Some of them are diagonal going up. Some of them are just flat, like we've seen on edit right here. Some of them, they're all kind of in that bandwidth of there's a maximum it can go to and a minimum it can go to, and there's like a line you can see, it's stagnating in between. So when you're screening for stocks, one of those easier ways of making money is finding a stock that has a support and resistance like this, because the minimum it can go is here, the maximum it can go is there, and if it meets your targets, let's say if it goes from here to up here, that's 20%. So if you find a stock that is stagnating between the support and resistance, and its expectation is 20%, if it's doing that, then that means if you buy here, you're expecting to get around 20%. If you buy down here, you're expecting to get around 20%. And this, as you can see, it's been doing this for a while. So this is from 24th of January until 27th, and then it dropped, and then somewhere here, what date is this? Some towards the end of January, it went up again. End of February, it started going down. So you can do this in this period of almost 4 weeks. You could just be buying, selling when it gets to the top, buying, selling when it gets to the top, and you can repeat that until when it actually breaks. We call it breaking the support and resistance. So as of here, that is February 11th, the stock broke resistance support and went below it. Now this is where you stop the strategy that you had selected this stock for, and watch out for what is the next support, which is, as you can see, turns out to be a little bit down here. I'll just put this line here, and now change this one to, let's say, red. Okay, so at this red line, that's our new support. So we know this is a support, and now the previous support becomes resistance, because every time it tries now to go above that line, it bounces back down, up, down. It went down all the way, and now it tried to go up again, but this time round it again broke that resistance and went above that line. Now, as you can see, given that it went above this line, it dropped, got to the line again, and went back up. And this is where we are today, where we've just, I recommended it, and whoever was watching could have invested in this today and made all these gains. Again, what you're looking at is for this stock to go up within this channel, which is from down here to up here, and you still have a chance of making that 20%. And given that the price is at 17, so let's say from here to up here, that's still 12% potential of this thing going up. But in the analysis, it might probably go down a little bit, try to get to this support before it turns back up and goes to resistance. So that's the whole strategy of using support and resistance to trade. Now, let me go to another example where it's a diagonal, like this one, GMBL, and we can see what that looks like. On a diagonal support and resistance. So you zoom out on this, and as you can see clearly, there is a diagonal thing going on. Let's get some of those lines. Okay, from here. So you just draw a literal line that touches almost at least 3 points. And for some of us who've done statistics, we know how to calculate trend lines. So if you're good at math, this is a good thing to do. And if you're not, you can learn a few things here and there. It's not like math that we know from school. It's a little bit easier. So as you can see, you can literally draw these lines and realize that there's at least 3 points at which it goes and bounces off. And let me change this one to green. Okay. So as it is, you can see there's a trend line, and there's a support and resistance. And now with this, you can trade in between these lines. As long as you figure out that it's been doing this for 2 or 3 times, you can come in and say, I know the moment it hits support down here, it will go up. It hits, it goes up. It hits, it goes up. Now let's look at what the upside is. From where it started, the upside is around 27%. Okay, then let's see the next one, from this support to up here, 23%. Let's see the most recent one of this. This is 39%. As you can see, even the little ones, this one right here, this is 27% right there. Another small one like this one did 21%. So once you figure out that this thing can can be going in between those two lines, then you can figure out that if I buy where it touches that line, I can sell where it touches the other line. And there it becomes a trading strategy. All you'll be doing is trading channels. These are called channels, or support and resistance. Now, this varies from stock to stock. Like you can see, GMBL is diagonally going down. So even a stock that is going down goes up once in a while, and you can capitalize on that and make money even if the stock is going down. So when you're screening, you can screen specifically for stocks that do this, and under FinViz, that is where you go to support and resistance. Let's just go back to the home page here. So support and resistance, and the support and resistance can be, diagonal either way or whatever. Now that ties into the channel up, channel, or channel down, which is essentially the same thing, like we've talked about. As you can see, channel up is the one that goes in the opposite direction, going up diagonally. As you can see, the same thing. There's a support here, resistance up here, and then it goes, bounces up like that. Same to this one. There's a support here, resistance up here, and then it bounces off like that. Now, you can do this as long as the stock is within those boundaries. And then after it breaks those boundaries, after it breaks support or resistance, then you calculate new trading strategies. Okay, so that touches a little bit about that support, resistance, channel up, channel down. The other one is the wedges, the triangles. So it's either a wedge or a triangle, or whichever way it is. So let's just look at a wedge up. Okay, so a wedge up is one that has one pointed side while the other side is broader. So it's like a triangle. We have the base and the two faces. So the base is a little bit broad, and then the two sides are, converging at a point. Now that also works like support and resistance, but now if it's within those lines, how it is going to trade within those lines. A good example is, let's go at PXE and see what it looks like on TradingView. PXE UNESCO. Okay, now we will zoom out a little bit, so that you can see the clear picture of what is happening. Okay, now on this day timeline, the channels are this. So you make sure it touches at least 3 points, and then the other one, the one at the bottom, it's this one, and touches at least 3 points. So it should look something like that. Yeah. It's just trying to make sure that it kind of looks exactly like it's supposed to look like, just to make the point. But anyways, as you can see, it sort of forms a triangle. Let me just add extra lines for the visual part of this explanation. I'll put those in blue so that they look a little bit clear. And let's just do this. I'm adding those blue ones just to show the triangle and how the triangle forms, or the wedge. So as you can see, with the blue line, it forms like a triangle. So down here is the base, and these are the sides, and the sides converge at a point here. but this is kind of, not the right way to do it. This will take a little bit of time before they converge at a point somewhere there in the future. So this was just to show you how that wedge forms. And now, if you're trading this, let me just remove these blue ones so that we can see how to trade wedges. Okay. So if you're trading this, okay, the first time it hit here, went down, hit the top, went down, hit the top, went down, hit the top, went down. So if you found this stock at this point, and it's a wedge because it's kind of converging at a point here in the future, then every time it hits that line, you're bound to get out. And let's say you're coming in right here where it's at the bottom. So if you're buying here and the top is here, that is 21%. And then the next time it drops, it will go close to this line. So if you want to buy, you buy right around this point here. Let me get a line right around this point here. Okay. So at this point where this line, let me just do it that way, where this red line and the red line converge, that's the point of entry. So let me put an arrow here. Okay. It should be like that. Okay. That is the point of entry. So just like previously, right here was the point of entry. And this one, wait. This is the point of entry. Right here is the point of entry. So as you can see, every time it hits this bottom line, it becomes a point of entry. And then every time it hits the top line, it becomes a point of exit. So those are entries right there. So you can predict what this stock is going to do based on this wedge that it has formed. The up resistance is on this side and the support is on this bottom side, and then you can do that. So that's wedges. The same thing happens when the wedge is opposite direction, whether it's going down, pointing down, or pointing whatever direction it is. So wedges, triangles, there's ones that have a flat bottom or a flat top. Either one of those, it forms a triangle somehow. Let's look at this other one for the sake of looking at a flat top. CHSCP. We see what it looks like. Okay. So I'll draw that support and resistance on this one so that you guys can see. As you can see, at this point here, this here, 31 right there. That is your support at the top, and then down is this other one that goes like that. Okay, let me make this green. Okay, and as you can see, let me just put another one like right here, like this blue. Okay, as you can see, the red, blue, and green forms a triangle, and that triangle is what we're looking for. You know that this is the bottom and this is the top. The top is flat, but the bottom is diagonal like that, a trend line. And therefore, if you're trying to trade this stock, you just follow that triangle. Every time it hits the green line, you buy. Every time it hits the red line, you sell. And that can give you consistent expected outcomes, because you know, since this is the top, and if you're down here, you're coming in here, you know the only way to go is up until you get to that top. But with this one, it gives you 5% on that first move. On the second one, you're down here, you go up here, 3%. And the third one, you're down here, goes up here, 2%. And as you can see, this is a declining return over time. So as you're trading these, you'll be watching out for breakouts. And some of those breakouts is like right here, where it wasn't significant enough for it to go back and down within this region. So it decided to just go above that region and made around 3%. So with the wedges, what happens is the moment it hits towards the end of that triangle, it's bound to go beyond that triangle and above. So that's essentially what happens. And as you're trading, you should watch out and figure out where that end of that triangle is, or the point, then do the necessary. Now, this is the same to the opposite of this, which is a flat bottom and a diagonal top. So which is it's like a mirror reflection of this one. And that will look something like this. Let me just put a horizontal here. And let's put this at blue. And then let me get another. Okay, so let's assume this triangle ends here. So the blue bottom triangle is what the opposite of this looks like. And now you realize that every time it starts small and keeps growing and keeps growing and keeps growing as it bounces in between this triangle. And until it breaks that point, it will keep doing that and keep growing and keep growing. So the key is to change the timeline and see, okay, what is it going to look like in 1 week? What is it going to look like in 1 month? And all that. But like I said, you always try and watch out for the triangle and see which is the upper trend line, which is the lower trend line, or which is, you know, if it's inverted or the other way around. So that is part of that triangle screening. So you can just screen for those stocks that do that specifically. Now, all these other things are a little bit complicated. We wouldn't want to go into all that. It will take a lot of time because each one of these is different. But like I said, it almost works like support and resistance for most part of the analysis when it comes to screening. Now, that is just what you get when you log in, when you go to the homepage of Finviz. It will either show you the top gainers, the top losers, you know, all this. And then after that, it will show you some of the strategies or the signals, whether it's a support, resistance, channels, wedges, and triangles, ascending or descending, up triangle, up wedge, down wedge, all that. Now, if you want something more specific to what you're looking for, then you come to the screener part of Finviz. So while with the screening is you're looking for something specific. So if your goal is a long term, you might be looking for, you know, dividend stocks or ETFs. If your goal is short term, you'll be looking for, you know, stuff that a little bit volatile. If your goal is a certain price range, you can do that. And now under the screener menu of Finviz, there's a few things here. And that is to help you pick exactly what you're looking for. For example, we have here the number one here is exchange. So which stock exchange? So there's the NYC, which is the main exchange. There's the Nasdaq, and there's Amex, among many other. So under custom, you'll choose other exchanges. But what we know mostly is the two, NYC and Nasdaq. So I wouldn't really want to pick any of these two. I'll just say any because either one of those is okay. And then market cap is the size of the company. As you can see, you can even put your cursor there and it will tell you what that is. So that equals to the total market value of all the company's outstanding shares, which is the number of shares multiplied by the price of that share. Let's say for this number one here, Agilent Technologies, the market cap is 37.52 billion. Yeah. And the price per share is 131. So if you divide this price per share by the 37 billion, you'll get the number of stocks this company has. So the market cap is the value of that company based on the current market price. And that keeps changing every day depending on the price of the stock and all that. So as you can see, there's a lot of things that you can pick from. But let's start, say we want a stock that is between, let's say, $10 and $20, for example. So you select that filter, and all the stocks on this list are stocks that are between $10 and $20. And as you can see, the number is 1,402 stocks that are between $10 and $20. Like I said, the US stock market has over 10,000 stocks. So those that are just between 10 and 20 is 1,400. Now you cannot go through 1,400 stocks, try to figure out which one to buy. Then you'll have to pick another filter. Yeah. So with that, let's say you want dividend stocks. You'll come here to dividend yield. And under dividend yield, you'll choose how much of a dividend do you want that stock to be. So if you're looking for, let's say, 2% dividends, you just select 2% and you see what comes up. And as you can see, the list changed a little bit, and we've narrowed it down to 544 shares or companies. So those are two filters. We've done dividend and we've done price. Now let's say market cap. We want something that is maybe a little bit bigger. So mid cap, 2 billion to 10 billion, for example. So you select that. And now you can see the number has gone down to 63. So 63 companies are mid-cap companies that are between 2 billion and 10 billion. They give dividends of over 2%, and the price is between 10 and 20. Okay. Now, the other filter I like using is current volume. So under current volume, you want something that is at least 200K in current volume, which means the number of shares traded in a day is 200,000 shares. So that means that stock has enough, momentum when something is happening. So they have energy in the stock market while you're trading it, it moves up and down very nicely. So anything above 200K, my most recommended above 200K. Anything below 200K is nothing. Throw that away. So we want something that is around 200K, but ideally I would say something that is above 500K volume. That gives you something that is going to move a little bit faster when you buy. So if you want something that can move in a day and make let's say 20-30%, this volume has to be a little bit higher, close to 1 million and above. But if you want something that moves in a couple of days, you're dealing with the 200 to 500K. And if you want something that moves over 1 week, you are here 50K to 200K. And anything below 50K, you know, you're gonna hold that for like forever. So I would suggest you try and get stuff that has higher volumes, but not really over 10 million, because over here where you get to millions, some of these stocks are either too expensive or are are not good for trading, because they've probably splitted their shares too many times to a point where they have too many shares to make sense. So unless the price is high, don't go to these higher volumes. But for our criteria 10 to 20, you want to deal with 200 to 500K and above. So with that being said, you've done that. Now the number of stocks have gone down to 34. Our deal is to get it down to around less than 10. That way we can be able to go through each one of those and see what they do. Now, among other things that I like doing is selecting either earnings date, which is when are they going to announce their earnings. And if they're going to announce their earnings, you want something that if you're going to trade it this week, you want them to have earnings this week. If you want to trade them next week, you choose earnings next week. So mostly when earnings happen, these stocks go up during that earnings, unless the earnings itself is negative. But if it's a positive earnings report, it goes up. So right here, let's say you want something that is having earnings this week. And if we select that, you can see there's only one outcome, GPS, which is Gap. Gap is in the retail industry. They do apparel, clothing. So people know Old Navy. Gap is part of Old Navy. But either way, let's look into that. So make sure when you're choosing, it's GPS, not Gap. When you're choosing, choose the NYC, because there's these other stock exchanges that are not American. Like this one is Brazil. This one I think is Australia or something. So make sure you're choosing NYC on the trading view, otherwise you land on a wrong stock. So as you can see on trading view, it will show you here earnings with an E. So they have an earnings in March 3rd, 2022. Period ended January 2022. They are estimating their earnings at negative 0.14 and their revenue at 4.49 billion. Now, if this result on the 3rd of March, if these results look good, then the stock will literally essentially go up. But if these results, the results come out below these numbers, then the stock will go down. Now, Gap gives you dividends, and they have dividends slotted in for April 5th, 2022. So if you're buying this for dividends, you know you have to buy this by this date, before this date, April 5th, to qualify for the dividends. And they pay you the dividends on the 27th of April, the same month. So if you're buying this for dividends, that's what you need to know. But if you're buying this to capitalize on the earnings, you do that. Now, part of the analysis is try and look at what happens the last time we got earnings on the same stock. So right here, we had earnings in November of 2021. Reported was 0.27, estimated was 0.49, so it wasn't that good. Revenue was estimated at 4.4, reported was 3.9, so it wasn't that good. Everything was negative, and as you can see on the stock, the day they announced those earnings, the stock dropped. So every time you see such negative numbers in the earnings, you know that stock is going to drop. But also remember this, that when a stock drops like this, then it gives you an opportunity to buy at a discount. Because if it was up here and it has dropped, you can buy when it's down here, and next time they have an earnings, it might actually go up, or a dividend. And as you can see, we have a dividend here and the stock went up. So if you bought this stock after it had reached the bottom right here, you could have made 13% right there in 6 days. Wait for it to go down again, come here, buy it, it goes up here, you make 18%, sell it, you wait again, goes down here, you buy, it goes up again, you sell at 15%, and so on and so forth. And then I want you guys to notice something also. There is a support and resistance on this one. So while you're analyzing, you need to also watch out for those things. Like right here, it's like we have a support, and around here somewhere, we have a resistance. So, and then there's another support up here. There's another resistance up here. All this, don't worry, you learn over time. Anyways, so this stock, as you can see, it's been bouncing between these two lines. And like I said, if you know that a stock has been bouncing between these two lines like that, you can predict that if you are here or you are here, next time it gets to this line, it might go up. So you can actually plan to buy it at that price and wait for it to go to that price. Until when it breaks that support, it goes below it, then you know, okay, there's a problem there. But as you can see, we're expecting earnings, and when these earnings come out, this stock might actually go back to this support, which is now the new resistance. And let's see, if you're buying this stock here today, what do you expect in 2 days? If it goes back up to here, you're expecting 13%. So when I put recommendations out there, I've done all this analysis and I've seen that, yes, if you buy this here, it has a potential of it going up to here. And now we know that if it breaks this support and resistance, it might go even higher. So if it goes higher than that, it's from here to the next support, which is here, and that will make you around 30%. And now, if you're in for the long term, it might even break this resistance and go even higher, which is from here all the way to the other support, and that will look at it as at 84%. So while you're planning your trades, if you're doing short term, you know, I'm expecting here 15%. If it goes up here, it's 30%. If it goes up here, is 50 something, almost 60, and if it goes up there, it's 80, or close to 90%. So as you can see, we've come from Finviz, we've filtered out until we were left with one stock, and then with this one stock, it has landed us on a TradingView here, where we've figured out that if it goes up, this is what we're expecting. And when are we expecting it to go up? We have a date here with the earnings on March 3rd. And if everything goes as planned, it might go up to here, make 15%, or if it breaks this support, it might go up to here and make 30% and all that. And that's how you come from screening a stock to actually deciding on whether to buy the stock or not. And here on Finviz, what we've done so far is just 5 filter points. We've done mid cap, we've done earnings, and we've done dividends, and we've done volume, and we've done price. Now, if you want to do, that's just descriptive. You're just saying these are the filters that describe the stock. Now, if you want to go into technical, let's say we remove this these other criterias, and we just leave it at price and volume, for example. Oh, wait, it's this one. So we're leaving it at price and volume. We want to take out the dividends. We just want volume and price as part of the descriptive. Let's see what happens when we go to technical. Under technical, you can see the performance over time, 52-day high, 52-day low. Beta is part of the volatility or risk measurement criteria. Average true range is part of the risk measurement criteria or tool. There's RSI, which does the same thing, and all that. Now, under technical, I like doing RSI, and I like using oversold 30. And what that means is, let's go back to this gap. Under indicators on TradingView, you select technicals and you select indicators, and then there's a list that comes. And on this list, if you scroll down, sure enough, you'll get to a point where it says relative strength index. This is what we call the RSI, relative strength index. So when you click on it, it forms this window down here, or scale of a thing. And now what that does is it shows you a different analysis, which is a technical analysis of this stock. And what that will do for you is it will try and show you, or let's say signal something before it happens. For example, let's scroll this down like this right here. So this RSI has a band between here 30 and 70, as you can see on this scale right here. There's a 70 mark here and there's a 30 mark here. This purple region is where the RSI likes to swing between. It goes from 30 to 70, 70 to 30, 30 to 70, 70 to 30, 30 to 70, you know, all that. Now, what RSI indicates is the moment the RSI, which is this purple line, crosses this 70 line right here, it shows the stock has reached a maximum. And sure enough, if you go here where the RSI is way above 70, you can see right there where the RSI is maximum, the stock is also maximum. And now that tells you that if you see the RSI turning back like this, so if we are here today and it starts going down like that, we know we should sell because it has reached the top of that movement or that momentum. So until the RSI goes way down below 70, close to 30, we cannot hold that stock and say we'll keep holding it. And as you can see, it went below 70 and went even to around 50 before it started going back up again. But let's go here where RSI went below 30 right here. As you can see, the moment it hit 30, everything dropped, and that signifies a sell. And when people are selling, you don't want to be buying around here. When people are selling, you don't want to buy. But the moment you see that RSI trying to turn back up, then you realize now it's time for you to buy, because the dropping has reached the bottom, because the RSI has indicated that it has reached the bottom, and now it's time for you to buy, and the buying happens. And as you can see, when people buy down here, it goes up. When people buy down here, it goes up. When people buy down here, it goes up. And now we are down here again, and if you're buying, you need to buy down here when the RSI is down. So you buy down here at around 13, 14, and you know for sure if this RSI reaches, by the time it reaches 70 or even above 50, you would have made your movement back up. So RSI indicates when to buy, when to sell, and RSI is one of those technical indicators that we call a leading indicator. It tells you what will happen in the future or in the near future, which is if the RSI is here, it is telling you it's time for you to buy, because in the future it's going to go up. And if the RSI is up here, it tells you sell, because in the future it's going to go down, and if you want to keep your profits, you sell at that point. So that's how you use that technical indicator to screen for a stock and figure out if it's a good time to buy or not. So when you're doing FinViz, you use RSI 30. Like I said, if it goes below 30, it's now the time for you to buy. So under FinViz, you make sure you're selecting oversold 30, which is everybody has been selling, and now we've gotten to the bottom, and now it's time for you to buy. So oversold 30 is the criteria you want to choose. And after you choose that, you can see the number is 19. So you still need to do something else to filter out to a little bit less number. And what we want also is something like change. For example, these are GAP or GPS stock. Yeah, it has lost a little bit, and from the previous high, it has gone down. You want a stock that has gone down from the previous high by a certain percentage. So let's just zoom here a little bit, and we see what are we looking at. So with this gap, let's say, as you can see here, the maximum it had been in the last few days was here at 14. It had gone down to here, which is around 6%. So when you're choosing a criteria like change, you want one that has gone down, and ideally between 5% and 10%. What that means is, like here, what we've said, it was a little bit higher. You want it when it's a little bit down, so that when you're buying it, you have a potential for it to go back up. But if it's up here and you're buying, you know, it even let's look at here. If you see this and you're like, oh, it's going up, let me buy, and you're buying it at around this region, that won't do you any good, because you're buying it when it has reached the maximum, the top. You want to buy when it has dropped, and a drop like that, you can see from this high to this drop, that is like 15%. You want to buy when it has dropped significantly like that, around 10 to 15%. But for short term is 5 to 10. For medium short term is 10 to 15. For long term, you can do at above 20%. So 20 to 70% drop can work for long term. But then, as you can see here, this had dropped 15%, and compared to from here again to down here where it is right now, that is 24%. So you want something that has dropped, so that when you go here on FinViz, you select a change and you say down. When you say down, you choose the percentage. So for short term, you know you're between 5 and 10%. So something like 6% will be good for short term. And now we see the number has dropped down to 10. 10 is an ideal number for you to put onto your watch list. So these are the stocks that you've filtered down from over 1,400. You've now been left with 10. You can still keep filtering with the technical, and let's say 52 week range. Yeah, you can use a 52 week range, which is the range between 1 year. Let me see, is it 52 week range? Yeah, 52 week range. So this is how high it has gone within a period of 1 year. And now if it has gone down by, let's say, 10%, you want that high to be above. So when we're looking at the high, you want it to be something close to either the 52 week low or far away from the 52 week high. So right here it says 10% or more below the high, 10% or more below the 15, 20, 30, 40, 50%. And then if you scroll down, you have 10 or more above the low, 10 or more above the low. What we want is something that has gone down maybe 10 or more or 20 below the high, the ultimate high. So if we select that, it still gives us a higher number. So we want something that has gone a little bit lower on this. So let's say 70% or more below the high. And now we've seen here, as you can see, we only left with four stocks. One of them is an ETF. The other three are stocks. So these are the ones that meet our criteria of it has gone down 70% from the previous high. So if we go back to trading view and let's zoom out a little bit. So in a 52 week period, that is within 1 year. So if we are here in March of 2021, 2022, we want to go back to March of 2021 and see the price was right here. And with this one, let's do the measurement. So if the price is up here, we've gone from here to here, that has dropped 48%. So if we were to go to FinViz and say something that had dropped 40%, we'll have gap in that list. It's not in that list. Maybe the 52-week period. Let's see, 30. It's around 30 to 40% drop. It's not showing. I think we changed one of the criterias and it's putting out, taking a gap out of that criteria. Anyways, let's do that 70% drop and see what we have. We have FIGS URUS, which is a stock from Russia. I know someone is watching this. We talked about this. This is why a mentorship program is good. If you're in the mentorship program, you know some of these things beforehand. So for that particular person, you already know about this one. We talked about this. Yeah. Okay. Let's look at FIGS and see what we're looking at on trading view. So right there, you type FIGS. I see FIGS. And as you can see, it's almost the same thing as GAP or GPS. And the earnings, they have earnings on 8th of March. These are the numbers, estimated numbers, and all that nice stuff. Okay, now as you can see, it has dropped, and now what we want is what happens if the earnings come out and they're positive. Where are we gonna go? As you can see, some of the stuff is a little bit clear to me, but it might not be clear to you. There's a support and resistance around there. There's a support and resistance around here somewhere, you know. There's a support and resistance. Some of this stuff is just eyeballing. It doesn't have to be perfect. It doesn't have to be calculated. You don't have to know exactly, you know, some of those stuff. I'm thinking even here is a support and resistance right there. Okay, maybe a little bit down, something like that. Anyways, so back to this first support and resistance right here. It had gone down here, went up, gone down, tried to go up, decided to go down, broke that support and resistance, and stuff happened. Went below that. So when it goes back up, we're expecting it to go back to this support. So if we are here today and it goes back up to here on 8th of March, that is 28%. So right there, you've picked a stock from the screener, and now you've come to technical analysis and you realize you have an upside of 28% in the next 1 week or so. Yeah. And if it breaks this support, it will go higher. So from here to here, which is 49%. And if it breaks that, it might go even higher from again down here to this support at 80%. And this support is a little bit critical because back in 2021, this is where it started to go up. Then it dropped below that, and that's where we are today. So it might take a while to break this support, but as you can see, there's a huge upside for this thing to go back to close to zero where it came from before it starts making headway up to double, triple the price. So when you're buying, you see RSI is below 30, right here 23. Earnings is expected. Everything is set up for you to buy this stock. And now you can see this is a good stock. You can buy, make 10, 13%, 20% or whatever. What is this? So this is 28%, 40% or 80%, depending on your time frame. So that's how you choose stocks based on technical analysis. Let's look at this last one, GDYN, and see what that looks like. See NASDAQ, good. As you can see, it's exactly almost the same thing, just different prices. This one is also expecting earnings March 3rd, so it's within a few days. As you can see, there is a support and resistance kind of right here somewhere. So some of this is so straightforward to me, you might not have the same ability to see, but it's okay. It's a learning process. So support resistance, support resistance, support resistance. Some of this stuff you learn over time is good. Don't worry. This one here. Then yeah, the rest. Okay. So this has broke support around somewhere here because it's been there before. It's broken. If you go back, I think you can see it's been hanging around here for a while, and then it broke that and then went up, tried to go down, stopped, went back up, tried to go above this, stopped, came down, went back up, you know. I broke this support, went all the way, stagnated here. There's a channel there. So all this is what you do on technical analysis, and then we are here today. Now we're expecting this thing to go up when these earnings are positive. If these are positive earnings, you are poised to gain. And how much? That is around 36% on the higher end, 34, 36%. So if you're buying this, you're buying it at around 1172, maybe, 10, 11 to 10, and then you're expecting to go up there. Yeah, so if it breaks this support, we know the next stop is probably up here. There's another one right there. So if it breaks this support, it's coming from here, it will go all the way to here, and that's like around 72%. And then the rest is, you know how it goes. Anyways, so short term, the moment they release their earnings, which is the next 2 days, it might go 30% at least. Then after that, all that nice stuff. Anyways, too much talking. I've done over 1 hour already or something close to that. Part of the screening is a cumbersome thing to do. We've only tackled the descriptive and the technical. There's a fundamental. This is a little bit different. Fundamental deals with the price, the books, the balance sheets, the cash flows, the revenues, the earnings, all those sales and revenues, all those accounting stuff. If you're good with accounting, this thing will be very helpful to you when you're dealing with it. So we will handle technical on our next webinar, because for the most part you can almost deduce what you need to do about a stock with just descriptive and technical filters. So as you can see, we've gone through probably 4, 5, 6 stocks based on just descriptive and technical. Fundamental, this one is mostly for long-term investors. If you want to invest in a ETFs and growth stocks for 5 to 10 years, then you might want to do part of that fundamental analysis. But for a day trading, swing trading, short-term trading, descriptive and technical can be good enough to get you started.